Based on the historical data and forecast, Bitcoin demonstrates a fluctuating trend within the range of $117,400 to $119,300. The RSI consistently hovers around the 60 to 70 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show the price recently approaching the upper band, suggesting a potential pullback or consolidation period. Considering these factors, a combined strategy focusing on opportunistic entries during pullbacks and breakouts is recommended. Specifically, I suggest a tiered entry strategy. First, when the RSI dips below 60, enter a long position at $118,500 with a stop loss at $117,400, targeting $119,000. Second, if the price breaks above the upper Bollinger Band, around $118,900, and the RSI is below 80, enter a long position at $118,900 with a stop loss at $118,600, targeting $119,300. This approach balances the potential for gains from both pullbacks and breakouts, while mitigating risk with defined stop-loss levels. The forecast data suggests a stable price around $118,900, which aligns well with these entry points. Based on the historical data and forecast, Ethereum exhibits a strong upward trend. The price has consistently been testing and breaching the resistance level of $3,860, with forecasts predicting further increases. The RSI has been fluctuating between overbought and oversold levels, with recent values above 80, indicating a potential pullback. The Bollinger Bands show that the price is currently near the upper band, suggesting a possible short-term correction. Therefore, I propose a strategy that combines trend following and mean reversion. We will enter a long position at $3,860, coinciding with the recent resistance breakout. A stop loss will be placed at $3,760, just below the support level, to protect against a potential downside reversal. The initial target price will be $3,940, aligning with the forecast for August 2025. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI drops below $40, indicating an oversold condition, we will add to our position at $3,760. The stop loss for this additional position will be $3,610. If the price touches the lower Bollinger Band, we will consider a partial profit taking at $3,900. If the price continues to rise and reaches the upper Bollinger Band, we will set a final target price of $3,970. This multi-layered approach allows us to capitalize on both the prevailing uptrend and potential short-term corrections, maximizing returns while minimizing risk. Based on the historical data and forecast, XRP shows a mixed trend with periods of consolidation and slight upward movement. The RSI consistently above 80 indicates overbought conditions, suggesting a potential pullback is imminent. The Bollinger Bands have been widening, indicating increased volatility and a potential breakout. Given the overbought RSI and the support level at $3.12, I recommend a short-term strategy focusing on anticipating a correction. We will initiate a short position at $3.38, placing a stop-loss order at $3.45 to protect against a potential continuation of the upward trend. The target price for this short position will be $3.12, aiming to capitalize on the anticipated pullback to the support level. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper band, we'll hold off on the short position, anticipating a further upward move. Conversely, if the price touches the lower band while the RSI is below 40, we will consider a long position. For this specific scenario, with the RSI at 82.7 and forecast price at $3.3, the short position at $3.38 with a stop loss at $3.45 and a target price of $3.12 provides a favorable risk-reward ratio. This portfolio combines technical indicators and price action analysis for optimal returns. Based on the historical data and forecast, BNB demonstrates a clear uptrend with consistent upward momentum. The RSI consistently remains above 70, indicating overbought conditions, but the price continues to push higher, suggesting strong bullish sentiment. The Bollinger Bands have been expanding, further confirming the increasing volatility and upward trajectory. Therefore, a long position strategy is recommended. I suggest entering a long position at $829, placing a stop-loss order at $803, and setting a target price at $873. This strategy capitalizes on the anticipated price increase over the next week, while the stop-loss order protects against potential downside risks. To refine the strategy, we incorporate the RSI and Bollinger Band signals. When the RSI drops below 80, it's a signal to consider entering a long position. The forecast indicates a continuous upward trend, and the Bollinger Band's expansion suggests continued volatility. I recommend entering a long position at $829, placing a stop-loss order at $803, and setting a target price at $873. This strategy combines the trend analysis, RSI signals, and Bollinger Band's expansion to maximize potential returns while managing risk effectively. The support price of $784 provides a further safety net for the stop-loss order. Based on the historical data and forecast, Solana shows a generally upward trend with recent volatility. The RSI has fluctuated between 55.5 and 82.4, indicating periods of both oversold and overbought conditions. The Bollinger Bands have widened recently, suggesting increased price volatility. Considering the current RSI of 61.9 and the forecast predicting a price range between $184 and $188, I recommend a moderately bullish strategy. We will enter a long position at $181. The stop-loss will be placed at $176, just below the support level, to protect against potential downside risks. The initial target price will be $188, aligning with the recent resistance level. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it could signal a potential buying opportunity. However, given the current upward trend, we will maintain the initial entry point. We will adjust the target price to $196, based on the recent peak. This strategy balances risk and reward, capitalizing on the prevailing upward momentum while incorporating protective measures against unexpected market shifts. This strategy aims for a high return by leveraging the upward trend and recent price action, with a clear stop-loss and target price to manage risk effectively. Based on the historical data and forecast, Dogecoin exhibits a fluctuating trend with periods of strong upward momentum followed by consolidation. The RSI consistently exceeded 70 in the recent past, indicating overbought conditions, but has since retreated. The Bollinger Bands show the price has been trending near the upper band, suggesting continued bullish pressure. Considering the forecast prices hovering around $0.24, a cautious yet opportunistic strategy is warranted. I recommend a long position with an entry price of $0.24, placing a stop-loss at $0.232 to mitigate potential downside risk. A target price of $0.246, aligning with the forecast high, provides a reasonable profit margin. To refine this strategy, we'll incorporate the RSI and Bollinger Band signals. When the RSI dips below 30, which hasn't occurred recently, a buy signal would be generated. When the price touches the lower Bollinger Band, it signals a potential buying opportunity. Combining these, if the price hits $0.238 and the RSI is below 30, enter a long position with a stop-loss at $0.232 and a target price of $0.246. This layered approach leverages both momentum and volatility indicators for enhanced risk management and potential returns. Based on the historical data and forecast, TRON shows a clear upward trend. The RSI consistently hovers above 60, indicating bullish momentum, and the forecast prices predict continued growth. The support price of $0.326 provides a strong floor, while the resistance of $0.431 suggests a potential ceiling. My strategy will be a combination of RSI and Bollinger Bands. I will enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, aiming to capitalize on the anticipated rebound. Specifically, I recommend entering a long position at $0.314. The stop-loss will be set just below the support price at $0.31, to limit potential losses if the price declines unexpectedly. The initial target price will be the resistance level of $0.38, representing a significant gain. If the price breaks through the resistance, I will adjust the stop loss to the entry price and extend the target price to $0.431, aligning with the overall upward trend and maximizing potential returns. This combined strategy leverages both momentum and volatility indicators for optimal risk-reward management. Based on the historical data and forecast, Cardano shows a mixed trend with periods of upward and downward movement. The RSI fluctuating between 54.2 and 82.8 suggests that the asset has been both overbought and oversold recently. The Bollinger Bands indicate periods of volatility and potential price reversals. Considering these factors, a combined strategy using RSI and Bollinger Bands is recommended. We will initiate a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. Conversely, we will short the asset when the RSI exceeds 70, indicating an overbought condition, and the price touches the upper Bollinger Band. Specifically, let's focus on the forecast data for August 2025. The forecast prices are relatively stable, hovering around $0.81. We will enter a long position on August 5, 2025, when the RSI is below 30 and the price is near $0.806. The stop loss will be set at $0.782, just below the lower Bollinger Band. The target price will be $0.831, the recent resistance level. If the RSI exceeds 70 and the price touches the upper Bollinger Band, we will enter a short position. For example, if the RSI reaches 80 and the price hits $0.813, the stop loss will be $0.813, and the target price will be $0.806. This combined strategy leverages both momentum and volatility indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SUI shows a generally upward trend with price fluctuations. The RSI values hover around 60 to 70, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands show that the price has been fluctuating within the bands, but recently approaching the upper band, suggesting a potential for continued upward momentum. Considering the support price consistently at $3.72 and the forecast price is slightly above $4, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to refine our entry and exit points. Specifically, let's initiate a long position when the RSI dips below 60 and the price touches the lower Bollinger Band. For instance, on July 29, 2025, the RSI was 55.6 and the bottom of the Bollinger Band was 3.34. So, the entry price will be $3.34. Place a stop-loss order at $3.72, just below the consistent support level. The initial target price will be $4.06, aligning with the forecast price on August 5, 2025. If the price reaches $4.06, we can consider moving the stop-loss to the entry price of $3.34 to secure profits and potentially ride further upward momentum. This combined strategy leverages both momentum indicators and support/resistance levels for a balanced approach. Based on the historical data and forecast, Stellar has shown volatility with a recent downtrend, finding support around $0.419. The RSI consistently above 80 indicates an overbought condition, suggesting a potential pullback or consolidation. The Bollinger Bands show that the price has been fluctuating outside the bands, indicating high volatility. The forecast for the next week predicts a slight decrease initially, followed by a potential upward movement. Considering the overbought RSI and the support level, I propose a short-term contrarian strategy. We will initiate a short position at $0.46, placing a stop-loss at $0.475, just above the recent resistance. Our target price will be $0.419, aligning with the established support level. This strategy leverages the expectation of a temporary price correction following the overbought RSI. If the price breaks above $0.475, the trade will be closed with a small loss, and we will reevaluate the market conditions. If the price reaches $0.419, the short position will be closed, securing a profit. This strategy aims for a quick profit from a likely retracement, acknowledging the inherent risks in short-term trading. The portfolio will be 60% short position, 20% cash, and 20% for potential future long positions. Based on the historical data and forecast, reserve rights shows a slight upward trend with price fluctuations within the range of 0.00838 to 0.00905. The RSI fluctuates between 50 and 73.5, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a bounce. Considering these factors, I propose a long position strategy. Entry price will be $0.00876, with a stop loss set at $0.00838, just below the support level, to limit potential losses. The target price will be $0.00905, aiming to capture the immediate resistance level. To refine the strategy, I will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, a long position at $0.00864 with a stop loss at $0.00838 and a target price at $0.00905 is recommended. Conversely, if the RSI exceeds 80, signaling an overbought condition, it's advisable to avoid entering a long position. Combining these indicators, the most efficient portfolio would involve a long position when the price is near the lower Bollinger Band and the RSI confirms an oversold condition, with a tight stop loss and a target at the nearest resistance. Based on the historical data and forecast, NEO demonstrates a fluctuating trend with periods of both upward and downward movement. The RSI consistently moves above 50, indicating a generally bullish sentiment, but recently dipped below 50, suggesting a potential short-term pullback. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, a combined strategy leveraging RSI and Bollinger Bands is recommended. We will initiate a long position when the RSI falls below 40 and the price touches the bottom of the Bollinger Bands. Specifically, enter a long position at $6.57. Place a stop-loss order at $6.38, coinciding with the established support level. Set a target price at $6.81, the recent resistance level. To refine the strategy, we'll incorporate the forecast data. The forecast predicts a price range between $6.57 and $6.68. Given the recent downward trend in RSI and the price near the bottom of the Bollinger Bands, the entry at $6.57 aligns with a potential rebound. If the price fails to reach the target and falls below the support level of $6.38, the trade will be exited to minimize losses. This combined approach, utilizing RSI and Bollinger Bands alongside support and resistance levels, aims to maximize potential returns while managing risk effectively. Based on the historical data and forecast, VeChain shows a slight upward trend with some volatility. The RSI fluctuating between 50 and 74 indicates periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a strategy combining RSI and Bollinger Bands for optimal returns. The strategy will involve identifying potential entry points when the RSI dips below 50 and the price touches the lower Bollinger Band, indicating a potential oversold condition. Conversely, exit points will be triggered when the RSI reaches 80 or the price touches the upper Bollinger Band, signaling an overbought condition. Specifically, I recommend entering a long position at $0.0253, coinciding with a recent dip in price and an RSI of 51.3. Place a stop-loss order at $0.022, just below the support level, to limit potential losses. A first target price of $0.0288, aligning with the recent resistance level and the upper Bollinger Band, is set. If the price reaches this target, consider taking partial profits and moving the stop-loss to break even. A second target price of $0.0299 can be considered for a more aggressive approach, but it carries higher risk. This strategy aims to capitalize on short-term price fluctuations while managing risk through strategic stop-loss placement and profit-taking targets. Based on the historical data and forecast, ZKsync has shown volatility with a recent dip and recovery. The RSI indicates a fluctuating momentum, currently around 53.2, suggesting it's neither significantly overbought nor oversold. The Bollinger Bands show that the price is currently near the lower band, indicating a potential bounce. Considering these factors, I recommend a long position strategy with a focus on capitalizing on a potential rebound. The entry price should be $0.0547, coinciding with the support level. A stop loss should be placed at $0.053, slightly below the lower Bollinger Band to protect against further downside risk. The target price is set at $0.061, aligning with the recent resistance level, offering a reasonable profit margin. To refine this strategy, I'll incorporate an RSI-based filter. We will enter a long position when the RSI crosses above 50, confirming upward momentum. Given the forecast prices are slightly below the recent close, I suggest a slightly conservative approach. Therefore, the revised entry price is $0.0565, triggered by an RSI crossing above 50. The stop loss remains at $0.053. The target price is maintained at $0.061. This combined strategy leverages support and resistance levels, Bollinger Bands for volatility assessment, and RSI for momentum confirmation, aiming for a balanced risk-reward profile. Based on the historical data and forecast, Arweave shows a generally upward trend with periods of consolidation. The RSI consistently fluctuating above 50, with several days exceeding 70, indicates strong bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. The support level at $7.24 has acted as a floor, while the resistance around $7.89 has capped gains recently. Considering the forecast for the next week, with prices generally staying above $7.71, a bullish strategy is warranted. Therefore, I recommend a long position strategy with an entry price of $7.71. Given the RSI approaching overbought territory, a conservative stop loss should be placed at $7.59 to mitigate potential downside risk. A target price of $7.93, aligning with the forecast high and a reasonable profit margin, is set. If the price breaks through the $7.93 resistance, consider adjusting the target price to $7.93 based on the subsequent price action and RSI readings. This strategy combines the upward trend, RSI signals, and Bollinger Band dynamics for a high probability trade. Based on the historical data and forecast, Ether.fi has shown volatility with a range between 1.12 and 1.35. The RSI indicates periods of overbought and oversold conditions, with recent values fluctuating around 50 to 60. The Bollinger Bands suggest potential price reversals when the price touches the upper or lower bands. Considering these factors, I recommend a combined strategy leveraging RSI and Bollinger Bands for optimal returns. Initially, I suggest a long position at $1.24, coinciding with the forecast price and the lower Bollinger Band. The stop loss should be set at $1.18, just below the support price and the lower Bollinger Band, to limit potential losses. The first target price is $1.3, aligning with the previous resistance level. To refine the strategy, I propose a second entry at $1.22 if the price tests the lower Bollinger Band again. The stop loss for this entry would be $1.17, and the target price would be $1.28, aiming for a modest profit. Furthermore, if the RSI falls below 30, indicating an oversold condition, a third entry at $1.16 can be considered with a stop loss at $1.12 and a target price of $1.2. This layered approach allows for multiple opportunities while managing risk effectively. This portfolio combines the three strategies to maximize returns while minimizing risk. Based on the historical data and forecast, TRON shows a clear upward trend. The RSI consistently hovers above 60, indicating bullish momentum, and the forecast prices predict continued growth. The support price of $0.326 provides a strong floor, while the resistance of $0.431 suggests a potential ceiling. My strategy will be a combination of RSI and Bollinger Bands. I will enter a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, aiming to capitalize on the anticipated rebound. Specifically, I recommend entering a long position at $0.314. The stop loss will be set just below the support price at $0.31 to limit potential losses if the price declines unexpectedly. The initial target price will be the resistance level of $0.38, representing a significant gain. If the price breaks through the resistance, I will adjust the stop loss to the entry price and extend the target price to $0.431, aligning with the overall upward trend and maximizing potential returns. This combined strategy leverages both momentum and volatility indicators for optimal risk-reward management. Based on the historical data and forecast, Conflux exhibits a volatile trend with recent upward momentum. The RSI consistently remained above 60, indicating bullish sentiment, with spikes above 90 suggesting overbought conditions. The forecast prices suggest a continued upward trajectory, potentially reaching $0.24. Considering the support price of $0.178 and resistance of $0.251, a long position strategy is recommended. We will implement a strategy based on the RSI, targeting the overbought level of 80 and the bottom of the Bollinger Bands to identify entry and exit points. The entry price for this long position will be $0.198, coinciding with the initial forecast price and the recent upward trend. The stop loss will be set slightly below the support price at $0.178, providing a safety net against unexpected downturns. The target price will be $0.24, aligning with the forecast and the resistance level. This strategy combines the RSI and Bollinger Bands to capitalize on the upward momentum while mitigating risk. The portfolio will prioritize this long position due to its high return potential and clear entry, stop loss, and target parameters. Based on the historical data and forecast, TRON shows an overall upward trend, consistently bouncing off the support price of $3.2. The RSI values fluctuate between 53.2 and 72.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. My recommended strategy involves a long position with an entry price of $3.33 on August 5, 2025, coinciding with the forecast price and a moderately bullish RSI of 61.7. A stop-loss order should be placed at $3.2, just below the established support level, to mitigate potential losses. The initial target price is set at $3.47, aligning with the forecast price on August 5, 2025. If the price breaks above the upper Bollinger Band, consider adjusting the target price to $3.5 for maximizing profit. This combined strategy balances risk and reward, capitalizing on the upward trend while incorporating volatility signals from the Bollinger Bands. Based on the historical data and forecast, SUN token shows an upward trend. The RSI consistently remains above 60, indicating bullish momentum, and recently crossed above 80, suggesting a potential overbought condition. The forecast price predicts a continued increase, with prices reaching $0.0233. The support price is $0.0211 and the resistance price is $0.0242. We will implement a strategy combining RSI and Bollinger Band signals. When the RSI falls below 40, we will buy. When the RSI reaches 80, we will sell. Our strategy is to buy SUN token at $0.021 when the RSI falls below 40. The stop loss will be set at $0.019, just below the bottom of the Bollinger Bands, to protect against a potential downward correction. The initial target price will be $0.024, near the resistance level. If the price reaches $0.024, we will move the stop loss to the entry price of $0.021 to secure profits. This strategy aims to capitalize on the upward trend while mitigating risk through strategic stop loss placement and profit taking at key resistance levels.